What is the Ichimoku Cloud? It's not just an indicator, but a complete trading system built on 5 lines. Don't worry, no formulas here, just practical, clear logic. At first glance, Ichimoku looks complex with all those lines, but once you break it down, you'll see how simple and effective it is. It's built on 5 key lines, and here's the breakdown. The conversion line, also known as Tenkan-Sen, a fast blue line that shows short-term momentum. The baseline, also called Kijun-Sen, shown in red on the chart, a slower line that reflects the medium-term trend. The Kumo Cloud, formed by 2 lines, Senkou span A and B, which shows the trend's direction and strength. The lagging span, also known as Chikou, a green lagging line used as a filter to confirm the trend. But how do you use all these lines? For beginners, focus on the 2 main lines, the conversion line, which is blue, and the baseline, which is red. They work like moving averages, giving you easy buy or sell signals. When the fast blue line crosses the slow red line from below, it's a bullish signal, so it's time to consider buying. When it crosses from above, it's a bearish signal, so look to sell. But hold on, don't rush into a trade based on a crossover alone. First, you need to determine the trend direction using the Kumo Cloud. So, how does the Kumo Cloud work? The Kumo Cloud is formed by 2 lines, Senkou span A and B. The cloud shows the trend's direction and strength. The wider the cloud, the higher the volatility. The cloud's color matters too. A green cloud, when span A is above span B, signals an uptrend. A red cloud forms when span A is below span B, indicating a downtrend. If the price is inside the cloud, the market is in a range, so it's best to avoid trading. Here's how to use it as a filter. Price above the cloud? Only look for buys. Price below the cloud? Only consider sells. Price inside the cloud? Chill out, it's a range, don't trade. For example, if the lines cross upward and the price is above the cloud, that's a green light for a long trade. If the lines cross downward and the price is below a red cloud, go short. If the price is in the cloud, ignore the crossover, it's probably a fake out. You can also use the cloud as a stop-loss level. For a long trade, place the stop below the cloud's lower boundary. For a short trade, place it above the upper boundary. For instance, if you're in a short and the price breaks upward through the cloud, the signal is invalidated, so consider exiting. Want to make your trades even sharper? Bring in the Chikou span, the green lagging line. It shows whether the trend is confirmed. If Chikou is rising and the price is above the cloud, it's extra confirmation for buys. If it's dropping and the price is below the cloud, it confirms a sell. Using Chikou might mean fewer trades, but they'll be high quality, saving you from bad setups. Think of it as your trading wingman. Let's see this in action with crypto charts. On the hourly ETH/USD chart, the price is above a green Kumo cloud, indicating a bullish trend. The Tenkan line crosses the Kijun line from below, and the Chikou span is above the price, confirming the signal. This screams buy. Enter the trade, set a stop loss below the cloud, and trail the take profit toward the cloud's upper boundary. The price rises, hits the upper boundary, and you lock in profits. If the price were inside the cloud, you'd skip the signal, avoiding a range-bound market. Here's another example, this time for a sell. On the hourly LTC to USD chart, the price is below a red cloud, pointing to a bearish trend. Tenkan crosses Kijun from above, and Chikou span is below the price, confirming the sell signal. Enter the trade, set a stop loss above the cloud, and trail the take profit to the cloud's lower boundary. The price drops, hits the target, and you close the trade. A reverse crossover of Tenkan and Kijun could also signal an earlier exit with even better returns. Ichimoku is a beast on its own, but you can make it even stronger by pairing it with other tools. Chikou money flow, use it to check if volume backs your trade. Parabolic SAR, this confirms entries. If SAR is below candles and the price is above the cloud, it's a stronger buy. If SAR is above candles and the price is below the cloud, it's a solid sell. Ignore signals if the price is inside the cloud. For example, on the LTC to USD chart, the price is above the cloud, parabolic SAR is below the candles, and Tenkan crosses Kijun upward. This confirms a buy. Enter, set a stop loss below the cloud, and take profit based on SAR or the cloud. The trade profits as the price rises. Pro tips for all traders. Stick to higher time frames, hourly or 4 hourly, for cleaner signals. Minute charts are noisy and can fake you out. Skip signals inside the cloud, it's a trap. Use Chikou span to confirm trades for extra confidence. Combine with simple indicators like parabolic SAR, but don't overcomplicate your setup. Test on a demo account first to nail your entries and exits. Experiment. Try your own rules to find unique approaches. Ichimoku isn't just an indicator, it's a complete trading system that spots trends with Tenkan and Kijun crossovers, filters signals with the Kumo Cloud, confirms trades with Chikou span, helps you set smart stops and take profits. Quick recap for your next trade. By signal, Tenkan crosses Kijun from below, price is above the cloud. Sell signal, Tenkan crosses Kijun from above, price is below the cloud. No-go zone, price inside the cloud? Skip the trade. Chikou confirmation, Chikou above price for buys, below for sells. Stop loss, set beyond the cloud's edge, below for buys, above for sells. Take profit, close the trade when the price hits the opposite cloud boundary or on a reverse Tenkan Kijun crossover. If this video was helpful, don't forget to hit the like button and subscribe. Catch you in the next video.